तमसो मा ज्योतिर्गमय.
Welcome to St. Vincent's College online learning once again. So today we will be learning about computerized accounting and use of Tally software and use of MS Excel for preparing financial statements. Now before learning, we should know what is accounting, what an accountant does when in a business organization is given a work. When you look at it, the accounting is called the language of the business, and the accountant records all types of business transactions. When you say business transaction, basically there are two types of transaction. The one is called cash transaction, the other one is called credit transaction. Now let's understand what does it mean by cash transaction. Now when I say cash transaction mean immediate payment of cash. That means when I am buying something or selling something, I receive some money or give some money. When I am selling something, I am receiving some money, or when I am buying something, I am giving some money as a business organization. Now this can be also use of check, bank note. When I write a check against the person or I receive a check from the person who has taken goods or services. Or it can be an online transaction. You use your debit card, credit card or any other card for buying or selling the things. The next one is mobile transaction. These days very familiar, all of you are familiar with GPay, otherwise called Google Pay or many other phone banking system. Now what is credit transaction? Credit transaction means a transaction taken place. I bought something but I will pay it later. Maybe a day later or a week later or a month later or few months later. Or I sold something, I have rendered a service, I will be receiving money on a later date. That is called a credit transaction. So there are two types of transaction, cash transaction and credit transaction. Now what is the purpose of credit transaction and cash transaction? When you look at it, there are different purposes. Let's say when I am receiving money in the form of cash transaction, it is in the form of an income. Or when I am giving money, I am giving money in the form of an expense. Or when I am giving money, I am purchasing some assets. Or when I am taking money, I am taking money in the form of a liability, loans, advances or capital. Now these incomes and expenses, assets and liabilities can be classified further. That is, income can be of direct income or indirect income. Expenses also can be at direct expenses or indirect expenses. Now how do you identify direct and indirect? Any expenses that is taking place for the purpose of the organization, business, that is called direct expenses. Same way, for the purpose of which the business is running, then that is called direct income. Now for example, I am running a grocery shop. Selling of grocery items are my income. Whereas I have kept a person as a pani puri wala next to my shop and he is paying me rent, indirect income. Or I am receiving some money in the form of a dividend or interest from bank, indirect income. Whereas when I am selling the goods, grocery item, direct income. Same way, when I am paying salary to my employees, that become indirect expenses. When I am buying goods in order to sell in my grocery shop, direct expenses. When I am paying electricity, it is indirect expenses. So my purpose is not running the shop and putting the lights on and paying the electricity bill. No, my purpose is selling the grocery items. So when I am buying the grocery item, that become my expense. When I am paying electricity bill, salary, interest or any other expenses, that become indirect expenses. Same way, assets and liabilities have been classified into basically two. When I say assets, I have assets which I am going to use it for longer period. My building, my furniture, my computer, these are called long term assets, otherwise called non-current assets. When I say assets which I am going to be encashed, which is with me for use of it in the next financial year, these are called current asset. For example, I have cash with me, I have bank balance with me, and I have stock of goods which I will be selling in the next year. These are all my current assets. Same way, current liabilities, the liabilities which I have to dispose of in the next financial year is called the current liabilities, whereas liabilities I have to pay very late, maybe after 5 years, 10 years, 20 years, those are called non-current liabilities. In that one, we have a capital also. Capital is the money received from the owner to start the business. When the business is stopped, then only you need to return. For a business, it is a liability in the form of a capital. Now, I told you direct and indirect. Now, when I say a credit transaction takes place, how it takes place? When a credit transaction takes place, and for example, I have given goods on credit, like sold goods on credit. What does it mean? That person is a asset to me, mean that person will return the money to me, is called a debtor. Now, when I am receiving credit or taking credit, that means I purchased goods from some wholesaler or a manufacturer and I have to give it back. That become a liability, which is a current liability. Mean I am supposed to pay to my manufacturer or the dealer that money, that is my liability. Now, when you look at the transaction in another way, there are regular transaction which is happening regularly, mean buying and selling, or certain transaction regularly happening. It can be of incomes and expenses mostly. Incomes and expenses are regular transaction. When I say incomes, when I am selling goods or I am receiving other incomes like interest. Every month I am receiving interest. Every year I am getting dividend. These are our regular transaction. Same way expenses, when I am purchasing goods or meeting my expenses like rent, salary, etc., commission, etc. These are our regular day-to-day basis or a time-to-time basis it has to be done. These are called regular expenses or regular income or recurring transactions. Whereas special transaction which is not happening every year or every month. Now, when I am buying a building, I am not a dealer in real estate and I am a grocery shop. I buy a building or a shop maybe for lifetime. I buy furniture maybe for 5 years or 10 years. After 10 years only I may change. I don't change it every year. These are called irregular transaction, otherwise special transaction. I don't take loan every month. I may take a loan in order to meet my requirement. That will be a long-term purpose. So these are called irregular transaction which will happen maybe once in a year or maybe once in 5 years or once in 10 years, like that. Now, what you have learned today? Basically, we have learned what is a business transaction. Any transaction that involves money or money related transactions are called business transactions in a business. This can be of two types, either cash transaction or credit transaction. The purpose of it either as an income, expense, assets or liabilities. And these, when you classify incomes and expenses are called regular transaction which will happen repeatedly, whereas assets and liabilities are special transaction happening once in a while. Now, if you have further doubts you wanted to clarify, you can email to me or WhatsApp to me to clarify the doubts. What you have to do in order to reinforce this, list out what are the incomes in a business possible, what are the expenses in a business possible, what are the assets in a business possible, what are the liabilities in a business possible. If you have an idea, list, this is the business. I am going to run a bakery business, I am going to run a grocery business, I am making a manufacturing business, or I am having a medical business. Whatever in the business, what are the incomes by which I will be receiving, which are direct and indirect? What are the expenses, direct, indirect? What are the assets, non-current, otherwise called fixed assets, and non-current assets, current liability, non-current liability. Thank you.